On this channel, we've talked a lot about owning the world when you invest, but there are many ways to achieve this, and we ourselves utilise many of these methods. We recently released a video on the stock market crash, and in it we briefly mentioned a Vanguard global fund that I was using to capitalise on the cheap stock prices. There's a compelling argument that the only equity fund that you need is a total world equity tracker.
It seems that some of you who watched that video were interested in knowing why we had chosen the Vanguard FTSE All-World ETF over a Vanguard LifeStrategy fund, or even over our own handmade world ETF portfolio. This is perfectly understandable considering how often we mention the LifeStrategy fund as a perfect way for beginners or the uninclined to own the world.
There are loads of global funds available to investors, and even Vanguard themselves offer several, which all appear on the face of it to do the same thing. This obviously isn't particularly helpful when all you want to know is what you should be investing in right now. The enormous choice just clouds our judgment. Under the hood, most of these funds are very similar, and any difference is minute enough to probably bear little importance in your decision making.
In this video, we're going to mention what we invest in and why, explain the difference between the Vanguard FTSE All-World ETF and a Vanguard LifeStrategy fund, why we might invest in each, and what truly matters when looking for a global tracker fund. Let's check it out.
Welcome to Unshackled.com, the investment channel and website that sets you and your finances free.
That was Andy and I'm Ben, and if you like what we say, hit the like button and click subscribe. Now, let's get into the video. What we invest in. Let's start this video with which global trackers we invest in and when, and then we'll get to the reasons why. While our two portfolios are not identical, they do follow the same design methodology. The bulk of Andy's SIP is invested in the Vanguard LifeStrategy 100% equity fund, and I will soon be consolidating all of my pensions into a SIP in this very same fund, so our pension investments will be pretty much the same.
Regular watchers of this channel will know that we prefer to invest the majority of our money in accessible accounts, such as a stocks and shares ISA or general investment accounts. That means not in pensions and lifetime ISAs, which tie up your money until you're too old to enjoy it. For these accessible investments, we build our own world portfolio consisting of a core of about 6 ETFs for each major region: US, UK, Europe, Japan, Asia Pacific and emerging markets. I also invest a portion of my wealth with robo-investing platform Nutmeg, which itself creates its own world portfolio. And in addition to this, I have also been buying into the Vanguard FTSE All-World ETF during this recent stock market panic.
Why we invest in these. Number 1. Vanguard LifeStrategy 100% Equity Fund. First and foremost, we think that the Vanguard LifeStrategy 100% Equity Fund, or even its bond variations, are excellent one-stop shops for owning the world. It does, however, overweight the UK with about 23% of the fund, which a normal world tracker would not do.
In fact, this is one of the things that we like most about it. We are obviously UK based, and an income in sterling is very important to us. Technically, this home bias means that the LifeStrategy funds aren't really global trackers because they're based on Vanguard's own proprietary view. With that said, it does hold investments in all the major global markets, and it does it all for an extremely low cost of just 0.22%.
This makes it perfect for our pensions, as we don't want to be managing a portfolio that we cannot access for decades. Vanguard handles all the rebalancing while you get on with living life now. This also makes it a perfect ready-made portfolio for those who can't be bothered to manage investments, but perhaps know enough to be able to assess their own risk appetite.
We're not financial advisors and we don't offer an advice service, but we do point people in the following directions. If you're a complete beginner, then perhaps look at robo-investors such as Nutmeg. They assess your risk appetite and invest accordingly for a very low fee. If you're an uninclined investor, Vanguard LifeStrategy could be appropriate for you. It's a one-stop shop for a very low fee, but you need to choose your own risk appetite. And for those who are experienced or wanting to learn, build your own ETF portfolio. Learn by doing, it's more fun, and you can customize it to meet your own goals and predictions.
One aspect of the LifeStrategy fund which we feel is important is its type. It is an open-ended investment company, or OIC, which is the most common but not necessarily our preferred fund type. That accolade goes to the Exchange Traded Fund, or ETF.
An OIC only has one-day pricing, so you don't know the price you will pay until when the order is executed. We love ETFs so much because they offer live pricing, so like stocks and shares, you know the price you pay before the order is executed, which leads us nicely into
Number 2, the Vanguard FTSE All-World ETF. This ETF holds an incredible number of stocks, 3,365 at time of filming, which is a representative sample of the world's listed companies. Unlike the Vanguard LifeStrategy fund, which in a way is actively managed by Vanguard, the FTSE All-World ETF seeks to track the performance of the FTSE All-World Index. This index includes approximately 3,900 holdings in nearly 50 countries, including both developed and emerging markets. It covers more than 95% of the global investable market capitalization. Now that truly is a global investment.
So why am I investing in this ETF over my usual self-built portfolio? Firstly, I'm doing it for simplicity. It's so easy to buy and regularly monitor just one fund. I'm still continuing to invest in my own world portfolio on a monthly basis, but I can more easily monitor the price of this ETF during the stock market crash.
We are always optimistic about the long-term future of the world economy, so it makes sense to put your money in a world investment fund that is market capitalization weighted. That means if Microsoft make up 2.6% of the world's capitalization, then 2.6% of your money is invested in Microsoft.
That also means that a very small amount of money is invested in companies that you've never heard of, which is awesome. But at such a small percentage of the fund, they will have practically zero impact on the fund's performance.
You have to wonder whether that level of diversification is really necessary, but at least it doesn't cost much at all. The ongoing charges fee is the same as LifeStrategy at 0.22%, so cheap as chips as we would expect.
Another reason why I'm choosing this fund over the LifeStrategy is because I'm investing quite frequently. And free investment apps such as Freetrade don't offer OICs. But they do offer ETFs, yep, and you guessed it, including the Vanguard FTSE All-World ETF. This has allowed me to buy regularly without incurring trading fees, which is awesome. By the way, Freetrade are giving away a free stock to new customers if they use our special link, which is found at Unshackled.com. You need to use this link to qualify for the offer.
This fund also distributes income on a quarterly basis, which we love as we like to see income flowing into our pockets regularly. I mean, who doesn't? The LifeStrategy range distributes income yearly if you buy the income share class and offers a similar yield of around 2%, probably because they share much of the same underlying holdings.
Granular detail. Okay, so you'll be glad to hear we're not going to deep dive into each fund in this video because most of you will switch off. But for those of you who want to do this yourselves, some good resources include Vanguard's own site, Morningstar is another fantastic website, and so is Hargreaves Lansdown. Have fun!
What matters when looking for a global tracker fund? 3 key things. Number 1, make sure it tracks the world. Many fund providers will give a fund a misleading name, so it's worthwhile to check the detail. Quite often they will just track the developed world and even miss out on the big guns such as China.
Number 2, diversification. Always check out how many holdings it has. The more the better, as it will represent more of the world, even if the percentage in the smallest holdings becomes seemingly insignificant. You can't accurately track the world if the fund doesn't own the world.
Number 3, cost. Our viewers know that cutting down on fees is vitally important to a portfolio's success. Don't pay high fees unnecessarily, and remember that the higher the fees, the less well it will do at tracking the world.
Question of the day, do you invest in the world? And if so, how? Let us know in the comment section. Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.